Assalamualaikum everyone. Today we are diving into the performance of Cimb Islamic Bank Berhad in the past 10 years. We will look at some key financial metrics to evaluate the performance of Cimb Islamic Berhad in the Islamic banking sectors. Islamic banking is unique because it follows Sharia principle, ethical way and also fair financial transaction. This approach prohibits riba and also promote profit and loss sharing methods. Before we start, let's have a look with a short interview with me and CEO Cimb Islamic about why we need to choose Islamic Bank.
Okay. Assalamualaikum, hari ini saya bersama dengan Tuan Syariman. Saya nak tanya sikit soalan simple tentang kepentingan Islamic banking. Kenapa kita patut pilih?
I think Islamic banking is very important sebab kita we are try to make sure that whatever we do in our life has a positive impact to others, society. So I think that is dari segi puncanya kenapa kita perlu melakukan Islamic banking.
Cimb Islamic Bank Berhad, part of Cimb Group, was officially launched in June 2, 2003 by Tan Sri Datuk Sri Dr. Zeti Ahta Aziz, who was the Governor Bank Negara Malaysia at the time. The bank quickly expanded, merging with Commerce Tijari Bank in 2005 and opened its first Syariah unit in Indonesia in 2004, followed by an entry into the Singapore market in 2006. Cimb Islamic has established itself as a major player in Islamic financial worldwide. In 2013, it became the largest Islamic bank in terms of branch network size and continues to dominate the sukuk market. The bank is also committed to social responsibility with initiatives like the program Keusamanan Cimb Islamic Tellers, with support underprivileged community with business grant and training. Cimb Islamic has been recognized as the best Islamic bank in Malaysia for 7 consecutive years, highlighting its excellence and leadership in the industry.
First of all, let's look at the first analysis, which is profitability analysis. First ratio from profitability analysis is the return on asset ratio. From 2014 to 2023, the ratio fluctuated, peaking at 2.03% in 2014 and the lowest in 2020 with 1.33%. The declining and fluctuating ROA shows inefficient asset use, with the lowest point in 2020 indicating poor performance. As a solution to improve ROA, Cimb Islamic Bank should use asset efficiently and cut unnecessary costs. Also, finding new ways to increase revenue can help boost profitability and stabilize the ROA. Second is return on equity ratio. This ratio shows variability from 2014 to 2023, peaking in 2019 and dipping in 2020. The recent decline in ROE indicates a decrease in profitability and efficiency in generating return for shareholders. This drop suggests potential issues in management or operational effectiveness that need to be addressed. To improve ROE, Cimb Islamic Bank should cut costs and improve operations. Investing in profitable projects and better management can also boost the returns. The third ratio is return on deposit. This ratio fluctuated from 2014 to 2023, peaking in 2022 and dropping in 2020. It ended at 2.23% in 2023, showing relative stability. The big drop in ROD in 2020 shows instability and inconsistent returns. This indicates Cimb Islamic Bank has issues managing deposit effectively. To improve ROD, Cimb Islamic Bank should manage deposit better and reduce risk. Offering competitive rates and investment can also help to stabilize the returns. Next, we will move to the profit margin. The profit margin shows fluctuation from 2014 to 2023, peaking at 55.01% in 2021 and dropping to 36.11% in 2023. The drop in profit margin in 2021 to 2023 indicates declining profitability. To improve the profit margin, Cimb Islamic Bank should focus on reducing costs and increasing revenue. Implementing more efficient operations and exploring new market opportunities can help boost profitability. Lastly is profit expenses ratio. This ratio fluctuated from 2014 to 2023, peaking in 2018 and dropping in 2023. Recent years show a downward trend suggesting better cost management. The high profit expenses ratio shows Cimb Islamic Bank is spending too much compared to its profit, especially in 2018. This indicates poor cost control. To fix this, Cimb Islamic Bank should reduce unnecessary expenses and improve efficiency.
Now, let's move to liquidity analysis. For current ratio, from 2014 to 2023, the current ratio fluctuated, peaking at 0.42 in 2016, but showing a concerning decline to 0.10 in 2023. A healthy ratio is typically above 1.0, so these numbers indicate poor performance and potential liquidity issues. To improve the current ratio, Cimb Islamic Bank should increase its short-term asset or reduce its short-term liabilities. This can be achieved by enhancing cash flow management, accelerating the collection of receivables, and optimizing payment cycles. Next, we have the loan-to-deposit ratio. A ratio above 1.0 can be risky, and in 2023, Cimb Islamic's LDR reached 1.10. This shift from a stable ratio below 0.94 up until 2019 to the recent higher values reflect a more aggressive lending strategy, indicating higher risk. To manage the LDR better, the bank can improving on monitoring loan disbursement to ensure a healthy balance. Moving on to the cash deposit ratio. This ratio has seen peaks and troughs with a high of 0.22 in 2017 and a low of 0.09 in 2023. A higher ratio indicates better liquidity, so the recent low suggests tighter liquidity, which is not ideal. To improve the cash deposit ratio, Cimb Islamic Bank should maintain an adequate level of cash reserve by improving cash flow forecasting and strategically allocating funds between cash reserve and income-generating assets. This will help the bank manage unexpected withdrawals more effectively. The quick ratio trend peaking at 0.42 in 2016 and dropping to 0.10 in 2023. The low quick ratio in recent years indicates that the bank might struggle to quickly meet its short-term liabilities with its most liquid asset, suggesting poor liquidity health. To enhance the quick ratio, the bank should focus on increasing its liquid asset, reducing short-term liabilities, and optimizing operational processes to reduce expenses without compromising profitability.
Okay, now let's dive into the last one, risk analysis. First, let's look at the debt to equity ratio. This ratio measures the bank's financial leverage. From 2014 to 2023, the ratio fluctuated, peaking at 16.78 in 2017 and stabilizing at 15.55 in 2022 and 2023. As an evaluation, we can say that a stable or decreasing ratio indicates good risk management. However, the high leverage seen in 2017 suggests potential over-reliance on debt posing a risk. As a solution, we suggest that the Cimb Islamic Bank should aim to reduce its debt reliance by increasing equity through retained earnings and issuing new shares. Next, we have the debt to total asset ratio. This ratio remains consistent at around 0.94, indicating that Cimb Islamic Bank maintains a high level of debt to finance its assets. From this, we can say that a high and consistent ratio indicates a strong reliance on debt, which can be risky if economic conditions change. As a solution, we suggest that the Islamic Bank should diversify its funding sources, such as increasing customers' deposits or seeking long-term financing options with favorable terms. Moving on to the equity multiplier. This ratio has been increasing from 49.86 in 2014 to 159.67 in 2023. Based on this, we can say that an increasing equity multiplier is a negative sign, indicating increased reliance on debt and decreased financial stability. As a solution, we can suggest that Cimb Islamic Bank should focus on strategic investments, Investing in high return projects and innovative banking solutions can attract more customers and increase deposits, reducing reliance on debt. Lastly, let's examine the loans to deposit ratio or LDR. This ratio rose from below 0.94 in 2014 to 2020 to into 1.1 in 2023. Based on our evaluation, an increasing LDR indicates more aggressive lending, which can lead to liquidity risk if deposits are insufficient to cover loans. As a solution, we suggest that the bank should closely monitor its lending practices to maintain a healthy balance between loans and deposits, promoting deposit growth through competitive savings products, and improving loan recovery processes can help maintain a balanced LDR.
In summary, CIMB Islamic Bank Berhad has demonstrated impressive resilience and adaptability in the Islamic finance sector from 2014 to 2023. The bank has maintained strong financial health and expanded its global influence while sticking to Sharia compliant principle. That's all. Thank you for your attention.